Let me tell you folks, what we've seen from Rolls-Royce is nothing short of a Hollywood comeback story. This isn't just a stock, it's a testament to a phenomenal turnaround. Under the leadership of CEO Tufan Erginbilgic, this British engineering giant has roared back to life. Think about it, we saw the share price absolutely explode, surging over 200% in 2023 and continuing its impressive climb with another 90% jump in 2024. This isn't just luck, it's the result of a brilliant focused strategy. The market cap has ballooned from a mere £1.5 billion in the dark days of October 2020 to a staggering £75 billion by June 2025. That's a 50-fold increase. This is the kind of action that makes you sit up and pay attention. The numbers don't lie, and the financials here are singing a beautiful tune. The company's underlying operating profit didn't just inch up, it more than doubled to £1.6 billion in 2023. The momentum didn't stop there. The first half of 2024 saw operating profit hit £1.15 billion, a massive leap from the £673 million in the same period a year earlier. This isn't just about cutting costs, it's about smart, sustainable growth. For investors who stuck around, the reward was sweet. The company even brought back its dividend in 2025, a clear signal of confidence from the top brass after the pandemic-era suspension. This isn't just a recovery, it's a reinvention. When a company executes a turnaround this flawlessly, Wall Street takes notice. The analyst community is still bullish, even after this historic run. While the explosive triple-digit gains might be in the rearview mirror, the consensus remains a strong buy. The smart money sees more gas in the tank. Look at the price targets. We're seeing figures like 967.5 pence, with some of the most optimistic voices like Bank of America slapping a target of 1,150 pence on the stock. They believe the shares could still be undervalued by as much as 28%. This isn't just wishful thinking, it's a belief rooted in solid fundamentals and future potential. So, the question on everyone's mind is, did I miss the boat? Is it too late to get in on the action? I say, don't focus on the price it was. Focus on the value it holds and where it's going. The stock's valuation has, of course, climbed. It's now trading at a forward price-to-earnings ratio of about 24 times. That's not the bargain basement price it once was, but for a company with this kind of growth trajectory, it's a price many are willing to pay. The explosive phase might be over, but the era of steady, powerful growth is just beginning. This is a story of transformation, and the next chapter is still unwritten. Let's break down where this incredible momentum is coming from. It's not just one part of the business doing the heavy lifting. Rolls-Royce is firing on all cylinders. The civil aerospace division is the star of the show. People are flying again, and they're flying more than ever. Commercial airline flight hours didn't just recover to pre-pandemic levels in 2024, they surpassed them. Every time a plane with a Rolls-Royce engine takes off, it's cha-ching for the company. This isn't just about selling new engines, it's about the long-term, high-margin service and maintenance contracts that come with them. This division is the cash cow, expected to make up over 60% of the company's operating profit. But it's not just about passenger jets. Look at the world we live in. Geopolitical tensions are simmering, and that means one thing: defense spending is going up. The defense division is reaping the benefits. We're seeing record-high orders from European governments who are finally waking up and bolstering their military capabilities. This provides a stable, long-term revenue stream that perfectly balances the more cyclical nature of civil aviation. It's a smart, diversified strategy. When one sector faces headwinds, the other can pick up the slack, creating a more resilient and powerful business model for investors. This is the kind of strategic thinking you want to see. And don't forget the Power Systems division. This is the unsung hero of the Rolls-Royce story. It provides critical power solutions for a huge range of industries, from data centers to marine vessels and industrial applications. This part of the business is a steady earner, delivering balanced growth alongside its more high-profile aerospace and defense counterparts. The synergy between these three core divisions is what makes Rolls-Royce such a compelling story right now. They aren't just an engine maker, they are a critical global engineering and power systems powerhouse, deeply embedded in the world's most essential industries. This diversification is key to its long-term stability and growth. When you put it all together, you see a company that has multiple powerful growth drivers pushing it forward. The recovery in air travel provides the immediate thrust. The increased defense spending provides a solid foundation of long-term predictable revenue. And the Power Systems division adds another layer of diversified, steady growth. Analysts are forecasting earnings per share to grow by an impressive 61% between 2024 and 2028. That's an average annual growth rate of over 17%. Forget the noise, follow the fundamentals, and the fundamentals here are screaming growth. Now, hold on. Before you go all in, you need to look at the whole picture. No investment is a guaranteed home run. Every high flyer faces potential turbulence, and Rolls-Royce is no exception. We have to talk about the supply chain. This is a big one. The aerospace industry is incredibly complex, and getting all the parts you need when you need them is a constant battle. These challenges were expected to cost the company a hefty 150 to 200 million pounds in 2024 alone. Any disruption, any delay, can have a ripple effect on production and profits. It's a risk that management is actively navigating, but it's a persistent headwind that investors must monitor closely. Next, you have to remember how sensitive this business is to the broader economy. The pandemic was a brutal reminder of what happens when air travel grinds to a halt. The company's fortunes are directly tied to the health of the global aviation industry. Any future economic downturn, geopolitical crisis, or health scare that keeps people from flying will hit Rolls-Royce's bottom line, plain and simple. We also have to consider global trade tensions. The threat of new tariffs, like a potential 25% US tariff on UK goods, could throw a wrench in the works. These are macro-level risks that are completely outside of the company's control but could impact its performance. Let's also talk about the dividend. Yes, it's back, and that's a great sign of confidence. But let's be realistic. The current dividend yield is hovering around 0.7 to 0.8%. In a world where you can find much juicier yields from other blue-chip FTSE 100 companies, this isn't going to excite income-focused investors. The story here isn't about the dividend. It's about capital appreciation and growth. If you're looking for a stock to pay your bills, this might not be it. The company is reinvesting its cash into future growth projects, which is the right move, but it means the dividend will likely remain modest for the foreseeable future. Finally, there's what I call execution risk. The long-term bull case for Rolls-Royce rests on the successful delivery of massive game-changing projects. We're talking about the next-generation UltraFan engine and the ambitious small modular reactor program. These are multi-decade projects that require flawless execution and enormous capital investment. Any major setbacks, delays, or cost overruns could shake investor confidence. The potential payoff is huge, but the path to get there is long and fraught with challenges. The current management team has done a fantastic job so far, but they need to keep delivering, quarter after quarter, year after year. Alright, let's talk about the future, because that's where the real excitement is. This isn't just a company fixing its current business, it's a company building the future of energy and aviation. The big story is small modular reactors, or SMRs. Rolls-Royce was selected by Great British Nuclear for a massive £2.5 billion program to develop this next-generation nuclear technology. This isn't science fiction. This is the future of clean, reliable power. We're talking about a technology that could revolutionize the energy grid, providing safe and continuous power to communities and industries. This is a potential multi-billion-pound market, and Rolls-Royce is positioned right at the forefront. Now let's be clear, you won't see these SMRs generating electricity and profits tomorrow. The first power isn't expected until the mid-2030s. Most analysts and investors haven't even fully priced this incredible potential into the stock's valuation yet. That's where the opportunity lies for long-term investors. Getting in now is a bet on the company's ability to execute this vision. If they succeed, the upside is enormous. This isn't just an incremental improvement, it's a transformative project that could redefine Rolls-Royce for the next century. It's a massive long-term catalyst that could power the stock for decades to come. And in the skies, the innovation continues with the UltraFan engine. This isn't just another engine, it's a technological marvel. It promises to be 25% more fuel efficient than its predecessors. In an industry obsessed with cutting fuel costs and reducing emissions, that is a game changer. Airlines will be lining up for that kind of efficiency. Like the SMRs, the UltraFan won't be in commercial service until the 2030s, but it demonstrates that Rolls-Royce is not resting on its laurels. It is investing in the research and development necessary to maintain its technological edge for the next generation of aircraft. This is the kind of forward-thinking innovation that creates lasting value. So what's the final verdict? Is it still worth buying Rolls-Royce in 2025? After this incredible run, the easy money has been made. But for investors with a long-term horizon, the story is far from over. You're not just buying a resurgent aerospace and defense company, you're investing in a future leader in advanced nuclear energy and hyper-efficient aviation. The upcoming half-year results on July 31st, 2025 will be the next key data point. Look, the risks are real, but the potential rewards are immense. If you believe in the management, the strategy, and the long-term vision, then Rolls-Royce still looks like a powerful buy. Booyah!